Right, so normally what we do for this, as in when we analyze the market for the week, normally what we do is we first visit this forex factory, right? So this one we do it every week, all right? Meaning at the start of the week, what we want to do is to have an overview of what's going to happen for this upcoming week. All right, so if you look at this week itself, all right, my calendar is set to the Singapore time, so depending on where you are, it's very different. So what we'll be looking out for this week is really on this, all right, Wednesday itself. What we have is BOE. And then if you're looking back into the later of the week, what we have is US NFP as well, right, on Friday itself. So this gives us a heads up and say that what you want to take note in the market is really on the pound market as well as the US market. All right. So this gives us some hint onto what market to focus on. Alright, and the next thing then what we want to look through is this one is the signal service. So those people who or clients who sign up for the signals, you get this every weekend. Alright, so what we want to go through on Monday is to really go through the thought process of how I identify all this setup. Alright. Okay, so for Chuan and Vincent, did y'all manage to find any of this setup similar to the signals? Okay. Oh, okay, I saw that. Okay. Mm-hmm. Okay. Cool. Okay. Okay. So just now on the Skype chat, you mentioned that the cipher pattern, right? So what we want to look through is maybe we go through this pair first, all right? The cipher pattern, which is a bullish cipher pattern. So let me pull up the chart, right? Right. So okay, let me go through one example, right? Then later I'll give you some time to practice on the chart itself and see if we can see the same thing, right? So my process of it is usually when I open up a chart, what I do is I'll scan through overall, all right, what the overall market is doing, all right? And if you're looking at this pair itself, all right, it has been moving up over here and then really much in just a consolidation, right, in the range bound area. So in that case, then we know that that's where the harmonic patterns usually form. Right, and what we usually go through is the anchor leaks, all right? The meaning we identify swing points. Right, I think Chuan didn't really go through gold market, right? Yeah. Yeah, okay. So then this is where you can share. As I'll share with you how to do it as well. So normally what we do is really go through the anchor points, all right, the anchor leaks itself, right. So once we identify that 4 points, right, so we roughly see what is happening over here. All right, what you see is a higher high. So normally when you see this is where the potential cipher pattern is forming. All right. So once we have that in mind, what we usually do is we want to use our Fibonacci tool, all right, to find whether the ABCD points it's valid. Right. So if I quickly pull from my first anchor leak to the second anchor leak, what you see is price retrace towards the 382, but not beyond the 618. All right. So this gives you a valid B point for cipher pattern. All right. So once this point has been valid, all right. So let me just key in the text. All right. So this is a B point for cipher. Alright, so once our B point has been established, what we want to look out for is a C point. Alright, and for those who are familiar with cipher pattern, C point, what we do is we pull Fibonacci from A to X. What we do is, after we identify the B point, what we want to identify is our C point. Alright, so for C point, just like I mentioned, you pull Fibonacci, alright, from this point, which is the A, towards the X. And what we are looking for is an extension of 127, right, to 141. Right, so okay, let me put this away. So if you see this, right, what we see is that this point itself comes in between the 127 and 141. So this gives us a valid C point, right? So if I drop in, this is our C point. Right. So once we have our B and C established, the last one is really simple, right? The D point itself. What we do is we simply pull Fibonacci from A, from X where we started, alright, all the way to C point for cipher pattern, right? And the completion level it's at the 786, right? And normally we draw in the triangle, right, for visual cue. So this is how we identify a pattern. Right, but how we trade it is when we identify the pattern itself, right? What we want is we want extra confluence, right? Confluence meaning there are more than one thing aligned at that level. So what we do is we drop a horizontal line over here, and then what we do is we'll go up one time frame higher, which is on the daily, right? And we try and identify if there's any previous support and resistance. So if you quickly look through over here, right, there's not much of support and resistance. Right, so in this case we only have one minor one over here, so this gives us a very, it's not a very strong confluence but a pretty weak one. Right, and normally what we do is we also use our Fibonacci tool, right? From B point we pull to see if there's any confluence. So if you see in this case we have a 127 confluence over here, right? And if you pull the Fibonacci from B to A, alright, you do see some confluence over here, which is the 1618. Right, so in this case, you have certain things coming together at this completion zone, which is your D point. So that gives us an extra confidence. That's why we want to take this trade. Right, so that's how I analyze the market. Alright, and then with that, then I'll send out the signal service. Alright, so let me quickly go through how we identify entry. So this is our entry, which is 111, which is 1111, right? And then how we do stops for harmonic pattern is that your stop loss will normally go below your X point, right? So if this is your X point, so normally our stops will be below this area, right? So let me drop the horizontal line, right? So this is where our stop loss will be. Alright, entry will be over there. Right, and for target for harmonic pattern, right, how we trade over here is we pull our Fibonacci tool, alright, from the extreme. So the highest or the lowest, for this case the highest is at the C point. What we do is we pull it towards our entry level, alright, and our first target will be at the 382, alright, which is over here, and our second target will be at the 618 level. Alright, so we have TP1, which is over here, right, and TP2 higher up. Right, so this is how we analyze, and then once we identify all these levels, that's where I then key in and then send it out as a signal service. Alright, which you identify over here. Yeah, so for the others, when you look at the signal service, then you'll be able to identify why we actually send it out. Alright, so this is some of the top process of how we analyze the market. Right, so then let's practice. Alright, so normally what we go through during this session is that each of y'all who join us, we also get to practice, and then we share what we see in the market. Alright, so let's focus on one of this, alright, Euro USD, which is a bearish bet. Right, so what we're going to do is I'm going to time, and then we'll take about 3 minutes for you guys to practice and see if you can identify the bet pattern itself. Alright, or if you see any other setups, alright, that you have identified, then we can go through it together as well. Alright, so what I'll do is I'll time, and then 3 minutes later on we'll be coming back, and then we can share what we've identified. Alright, what we have over here, alright, once again we look at the higher time frame and look at what the price has been doing. Alright, so in the past 1 week or two, alright, what it has been doing is that it's currently rallying up, and then at this moment what it's doing is still in the range bound. Right, so what we do is then we start drawing in our anchor legs. Right, so from current price, how we draw it in is we connect, alright, from high to low. Right, and for what I do is I normally use the fractal. Right, all these little gray and blue pink dots are actually fractal indicators that you see on the chart. So I'll use it as a visual guide and I'll connect them together. Alright, so what I need is basically just 4 lines, alright, 4 anchor leaks, and then I can identify a potential harmonic pattern. Right, and once we have 4 lines, right, what I do is then you pull in your Fibonacci, right, from the first one, alright, from the first anchor leak, from the top to the bottom. And what we see is that there's a pullback, right, retracement towards the 50% retracement level. Right, so this gives us a clue that when price retraces to the 50%, that's a potential bad pattern. Right, and then we can quickly identify that a bad pattern completes around the 88.6 level. Right, so that's the level which a bad pattern completes. So if we draw in the triangle, so this is what it's going to look like. Alright, so then once again the process, once we identify the pattern, we want to find any confluence level. That means anything also happens around that level. So what we do is we first scan through at the back. Alright, we look at a higher time frame if there's any confluence of support and resistance. Right, so over here in this chart, we do see some support and resistance in the past as well. Right, so this gives us some clues that okay, this line itself, there's a pretty good resistance in the past. Then now what we want to do is we want to go back on this time frame and search for any Fibonacci confluence level. Right, so that in this case, right, what we do is we use our Fibonacci tool from B point, we pull towards our A point to see if there's any confluence. Right, so in this case, you can see that there's a 161 extension over here. Right, and if we pull it another direction, right, towards this, we can also see there's a very close 1618. Alright, so this gives us the extra confidence that this pattern, should it be completed, there's a high chance that it's gonna be successful and profitable. Alright, so then once again we use this and how we identify our entry. Alright, we put in this too. So our entry will be there, the 88.6 level. If you guys can hear, alright, then it should be fine. So just now we were on this okay, so just now we are on this Euro USD pair, right? So I was just sharing with you how we analyze the market, and then this is where we enter the market. Alright, so just now we look at the higher time frame, we have some confluence, alright, and we also analyze and check based on Fibonacci confluence. Alright, we also have some of it. Alright, so if you look at this 1618 extension confluence with our entry point over here, and if you pull it the other direction towards the another anchor leg, we also have a 1618 confluence. Right, so this gives us the extra confidence that say if price comes back up towards this 88.6, right, which is the 1.1419, that's a high chance that it might reverse and go back down. Right, so that's where we're gonna key our entry point. Alright, and for stop loss, alright, how we normally do it is we usually put above our X leg, which is the 100% over here. Right. So what we're going to key in, right, is for our entry. If you look at this one, our entry is at 1.142. Our stops is 1.1475. Right. So what I want to share with you is that if you look at this, the X point itself, the level of it is at 1.1460. Right. So what we do is we also give it some buffer. Alright, that means if we are selling it, the stop loss buffer will give it about 15 to 25 pips above. So this gives some buffer in the sense that if price comes back up and then it decides to bounce off our X level, alright, we will not get stop out right on the dot because we want to give it some room for price to move around, then in case later it comes up to the X double top and then it goes back down. Right, so that's why we give some buffer at our stop loss. And then for our targets, how we do it is we pull from our extreme, alright? So in this case, this pattern extreme is at our A leg. So our A point, we pull our Fibonacci all the way towards our entry point, which is our D point, alright? Entry point over here. So our first TP will be using the 382, and the second TP will be using the 618. Alright, so if you take note, right, this 38.2, the price level is 1.1298. So if you round up, it's about 1.13. Alright, so that's why if you look at our signal service, alright, this one, the TP1 is 1.13. right? TP2 is 1.1225, right? And if you look at this level, 1.12244. So what we do is we just give it a round up, all right, to the closest 25 or 0 number. All right, so any questions on that? Any questions on the Euro USD pair? Okay. If not, then just now Vincent posted two of the charts. We can go through that. All right, the first one is Euro Yen. All right, the second one is NU. Okay, Tran, can you hear us? Okay, Tran is still calling. Okay, so Vincent posted two charts. One is the Euro Yen. So this first pair is the Euro Yen itself. All right. He identified a cipher pattern. Okay, quickly check. Okay, Vincent, why? The reason why I never identified this is because this never really hit the 127. All right. The reason why I never identified this as a pattern, right? Because this level, you can see it never really hit the 127. So for me, as long as it's never hit, right, it never entered the zone between the 127 and 141, I wouldn't take it as a potential cipher pattern. Alright, but in another case, if let's say because you are using different broker, alright, your broker might have hit this 127. So in that case, then it can be a potential valid cipher. Alright, let's say assuming that it's a valid cipher that you have identified, right? The next thing what you need to do is you also want to check whether there is a confluence level at the completion zone. Alright, so let's say if you set this as a cipher pattern. Yeah, okay, Vincent, your chart seems to hit. So then you can then what you want to do is you want to check whether there's a confluence level, right? So go through the point system. So what you want to do is you go higher time frame, right? You look left and see if there's any potential structure level. Alright, so in this case there seems to be certain levels, support and resistance over there as well. Alright, so yeah, so Vincent, if you went through it and seems good, right, then you can set this into your trade plan as well. Alright, so if you check your extension level, it seems to be very good as well. Alright, so maybe what I'll do, alright, I'll also send this out to the group. Alright, so everyone will be able to see this as well. Alright, so let me go through quickly how I'm going to set my stops and entry. Right, so my entry will be at 133 points. Okay, the price over here, if you look at it, is 133,626. So what I'm going to do is I'm going to round up a little bit to 65. Alright, so my entry for this is going to be 133.65. Right, corner. So, yeah, right. Try the earphone. Maybe there's some part on Skype. Okay, so okay, I also speak louder, right? So for entry, it'll be 133.65. Then for our stops, how we're gonna do it is it's gonna be below X. So at X, right, this is the level 133.148. So what I'm gonna do is gonna round up a little bit to 133.15, and then to give it a buffer, all right, I'll minus away 15. So my stops will be at 133.00. All right. So for targets, how we're gonna set it? We're going to pull from this extreme, which is our C point, towards the D point. Alright, and our first target, alright, will be at the 382, which is this level. And the second target will be at the 618. Alright, so if I key in TP, alright, TP will be at 134.3. That's TP1, alright, TP2 will be at the 618 level. 3 4.7. Right, so this is okay. Let me just save it and then I'll send it out as well. Okay, so normally what I do, right, is I also like to save all my charts that I've analyzed, alright. So if you can see September, this is all my analysis folder. So if you can see September itself, every time I do an analysis, I like to save the chart for future reference as well. Right, so today is the 28th. Okay, so just save it. Okay, yeah. So this is one potential valid pattern that Vincent has identified. Alright, but I missed it out because on my site, my price didn't really hit the 127 over here. Alright, but different brokers might be slightly different because for me it just missed by maybe a few pips itself. Alright, so let me just send this out. Alright, so for those who are not familiar, we have this Slack app as well. So this Slack app, it's pretty fun in the sense that we can really send a lot of charts out. Alright, so if you are not in, let me know. Right, then just drop me your email and then you'll be able to get in this Slack app as well. Right, let me just send this out. Right, right. So the next one that Vincent identify is on the New Zealand dollar. Alright, it's also a cipher pattern. Right. So once again, the first thing I like to do is before I identify any setup is to look at the market and what it's doing. Right. So if I browse through, right, scroll back a little bit, you can still see that New Zealand dollar is in a gradual downtrend. Right, it's still moving downwards, but it's moving pretty slowly. Alright, it ranged a little bit, it moved down, and then it ranged a little bit, and then potentially might still go lower. Right, so this is what's happening over at the Kiwi market. Right, and if you look at the 1 hour time frame, that's where Vincent identified a potential setup on Cypher as well. Alright, so once again, my chart didn't really hit the 127. Alright, so for this, oh, okay, Vincent take this link. Alright, so he starts from here. His X starts from here, A, B, C. So you can see the C just hit nicely. Right, so this is something that I want to share with you guys also, because for me, I don't like to start identifying patterns at midpoint. Right, so I really like to take points which is really at the extreme. So how I normally draw my anchor legs, alright, would be really something like this. Right, so if I draw in this way, right, then the cipher pattern wouldn't be valid. Alright, I wouldn't want to take it over here mainly because this is not a very distinct turning point. Right, Vincent can hear, right? Right, so because of that, I wouldn't want to take this point. Alright, so I would rather take it all the way towards this. So in this case, then it won't be a valid cipher pattern. Alright, so let's assume if you want to take it from there, right, then what you need to do, you also need to check for confluences. Alright, so if it's this level, what you want to do is you want to check whether there's a support and resistance level. Alright, so if you look at the higher time frame, alright, daily there isn't much, alright, but over H4 there is a few, right? Not a very strong one. And if you check on our Fibonacci confluence, right, you do have a little bit over here. Alright, so in that case, you can decide whether you want to take this, alright, according to your trade plan, whether it fits into your trade plan. Alright, but what I want to share with you is, because if you take this cipher pattern, alright, let me draw it in. Alright, if you take this cipher pattern, your stops will go below here. Alright, below your X point. Alright, but if you put your stops below your X point, your previous low is actually at this level. So in that case, right, price can do something like this. Price can go below, alright, hit your stops, and it bounce off this previous support level before it comes back up. Right, so that's the reason why I wouldn't want to take harmonic pattern based on this point itself. Right, I like to take my starting point, which is the X point, at the extreme level, meaning either here, which is the very extreme low, or over here at the extreme high. Right, Vincent, got that? Yeah. Okay. So can you understand what are some of my thought process of how I identify these patterns itself? Okay, got it. Okay, you guys got any questions on this? Okay, or any pair you guys wants to go through, right? If not, right, I'll pick okay, this one, which is pound dollar. Right. So the other setups that we have over here is we are doing and trading on structure trades. Right. So not just on harmonic pattern, but what you see over here, pound dollar, we have a bearish structure setup as well. Right. So let me go through with you what a structure trade is. Right. So let me clear the charts. Right. So for structure trade, right, the strategy itself, the thought process that I go through is pretty similar as well. So the first thing I would like to do is I also look at what's happening overall in the market. All right. So what you can see over here, pound had a very strong dip. All right, had a good retracement and then it fell back down. All right. And if you look at the structure level, which is here and here, all right, what you see is that the price has broken below this two level. Right, and what we normally do is we draw in a horizontal line at the previous closest structure, which is here, and we draw in our Fibonacci too, right, from the recent high to the recent low. And what we identified is that this level confluence with a Fibonacci 2, which is the 38.2 level as well. Right, because of this confluence, what we are expecting is price will come back up towards this level and respect this structural level and continue downwards. Right, so that's how we identify structure levels. Right, Vincent, earlier you got this question on this setup. You want to clarify that question? Okay, maybe you can draw lines. Okay. Let me share with you. Okay, this is slightly different from 1, 2, 3, 4. All right. Okay. Let me share. Okay. Normally, how we trade. Vincent, to clarify, right? Normally, how we trade, we want to have 1, 2, 3, 4. Right. Basically, we want to have something like this. Right, so 1, 2, 3, 4, we wait for the break of this. Right, but in this case itself, we didn't have 1, 2, 3, 4. But what I've seen is that this is a very strong downward movement. Alright, so basically what I'm trading on this is really just a retracement of this downswing. Alright, so that's why there's no 1, 2, 3, 4, but it's a valid retracement trade. That's what I'm doing. Right, clearer now? So it's not the usual 1, 2, 3, 4 setup, but it's more like a trend continuation. We are trading the retracement downwards. Bullish on GU, right? It's not so X at 1535. Oh, okay. I think that one is really the smaller time frame that he's looking at. Right. Yep. Okay. I wouldn't say that's a 1 hour. Okay, in response to this, right, GU on H1 bullish cipher, I wouldn't say it's a 1 hour because normally how I do is that if the pattern is so small, all right, what I'll do is I'll drop down my time frame so that it becomes clearer. Right. So in this case, if you look at this, right, C point extension falls between 127 and 141. All right. So that's a valid C point. All right. And if I draw in and I check, all right, so 786 completes around this level. Right. So ratio wise, it is a valid cipher pattern. Right. Then normally what I do is after I go through this, alright, I identify a pattern. I don't straight away trade it. Right. So what I like to do is I would like to go higher time frame and see if there's any confluence of structure level. Right. So we do see that we have not I wouldn't say it's a very strong one because this one there's only one and it's really on a higher time frame. Right. Then So there's not much of a very strong support resistance unless you take it over here as well. All right, and if you do the extension wise, all right, you can see that there is some Fibonacci extension lining up as well. All right, from 618 to the 141. All right, so this is it. All right, so I would say yes, it is a valid one. All right, and if you want to take it, right, take this as a intraday trade, right? Meaning your I wouldn't say that you can enter here and then expect price to go all the way back up, right? But what okay, if I am going to trade it, all right, I'm still going to use my entry and TP like this. So my TP is going to be here. This is my TP1, all right. TP2 is over here. All right, entry and stops will be like this. We just key it in. All right, entry TP1. Right, stops is below there. Right, so if I were to trade it, this is going to be like this. All right, I wouldn't aim for such high targets as well. Get found one NU. Okay, later we'll go through on NU. Get filled. Okay, to tackle on Florence question whether this gap is filled, right? Normally gap is not okay. Gap is not in my trading plan, alright. So I wouldn't have, as in, I wouldn't make any decision based on the gap, alright. But in forex, in FX market, normally the gap will be filled, right? So maybe what you want to do is you can put your second TP maybe slightly higher, right, to take advantage of the gap, right? This is something that you can take note as well. Right. But if simply, if you are taking this, you can see your risk to reward ratio is not too bad already. All right, you're risking this, but your reward is really, really high already. All right, your first TP level give you a more than 1:1. Right, so this is a valid trade that you can take as well. All right, so let's take a look at May's at UH1. All right, so let's go through U. Okay, May's pattern is this. Okay, May, for you to note, right? This point is not a valid completion point. All right. Why? Because if you look at this, right, X, A, B is, it comes back to your 618. So it is a Gartley pattern. All right. Gartley pattern minimum retracement is at the 786. All right. And I shared with you what I normally do is I'll pull in my extension. That means I pull Fibonacci from B to A. All right. And I aim for 127. So 127 this time round nicely coincide. All right. Coincide with your 786. So your Gartley pattern looks like this. Right. So it hasn't completed yet. Right, but sometimes price do this, alright, it comes very close and then it starts to come down. Right, but if you want to follow your plan, you shouldn't enter this trade unless price hits your entry level. Right? Got that right? Yep. No, I wouldn't say it has played out because it's not completed yet. Alright. So what we do is if price continue to go down, alright, then this basically this pattern never complete. Alright, what we need is that for price to really touch this level and then comes down. Then it's a valid pattern. Okay, got it? Okay, right. Any questions? Yes. Okay. Okay. So let's look at SNR. Alright. Right. So this Gartley has a very nice SNR. Alright, support and resistance, because if you look at this, you have one touch over here. right? This touch over here as well, and this touch, right? So definitely price haven't touched it. So it's a good setup if price comes up to this level, right? And to answer Vincent's question, right? Will I hold it until it touches? All right. For this case, right, my trade plan is very simple. I analyze the market on the weekend, all right, and then I'll key in all my trades on Monday, all right. So yes, if I key in on weekend, I'll basically hold it. Even if it come down already, all right. So basically, I'll still hold it, and if price goes back up from here, then this trade will be triggered, right? So maybe if I add buffer, will it be triggered? No, because if you look at this, your entry should be at 0.641, all right, and price only comes up to 0.401. So that's basically like 10 pips away from your entry, all right? So 10 pips is pretty wide, so you wouldn't want to lower your buffer so much. You got that right? Yeah. Victor, you got question? No, okay. Yeah, but if you trade based on support and resistance, this is a good level. All right. And if you take into account the fundamental of New Zealand, it's still pretty weak. All right. So this is still trading together with the overall direction, be it fundamental or technical. Okay. Any questions on this pair? Okay. If not, what we can go through. Oh, cat. Okay, odd cat we do have few patterns, alright. So let's take a look at the odd cat, alright. Okay. Okay. No, it's not here. Okay, let me load up the proper chart. Okay. Okay, what we're going to do is let's take a look at Aussie Canadian pair. All right, once again, if you look at the overall time frame and the higher time frame and the overall trend, right, what this pair is doing is still in a downtrend, right? You can see price is currently still moving in the downwards, all right. And just last week itself, it has made a retracement trade, retracement up. All right, so what we're going to do is we have this in mind, meaning so we are only trying to find right patterns that are really together with the trend. All right, so we have a bias towards bearish pattern, all right, more than the bullish pattern. So this is something that we set in our sentiment, all right, and then with that we will start monitoring and see if there's any setup. All right, so what we do is we then draw. All right, the process is the same. So we draw in our anchor legs. All right. So if you have 1, 2, 3, 2, all right. So if you use this, all right, basically you have 1, 2, 3, 4. Right. So with 4, you can start identifying if there's any potential patterns already. Right. So if you draw in our first retracement for our first leg, you can see that this comes in between the 618 and 786. Right. So this is a potential Gartley pattern that's going to form. All right. So Gartley pattern, how I trade it and how I find the completion point is I always pull from my B point, right, towards my A point, and I'll trade at this 127, which is over here. All right. So this is a potential Gartley pattern. All right. This one I never include in the signal. One reason is because on a higher time frame, which is H4, all right, and it's such a big pattern, right? What it do is that it usually take a very long time before price move up to this level, right? So because of that, simply because of this reason, normally I don't send it out to the members, all right, in terms of this trade setup itself. Right, but if you look at the pairs that we have, right, we basically have two. All right, one is the bullish Gartley on H4, one is a bearish bet. All right, so let's go through the bullish Gartley on H4 first, then we can drop down to a one time frame lower. Right, so this is a bearish Gartley that we identified. Right, so for those who are interested and their trading plan is to trade on the higher time frame, you can take note on this as well. Right, but the bullish Gartley that are identified is basically using this leg. Right, so from X to A to B, right, B to C, and expecting C to D. Right, so if I pull in my Fibonacci tool, you can also see that my B point comes in at 618 to 786, so it's a valid B point. Right, and C point is pretty not a very matured C point, right? But if you pull in the Fibonacci tool, you can see that it is already a valid one, right? Because it comes in at least a minimum of 382. Right, so with that, how I do it is I'll use my extension to find the 127, which is your D point. Right, so D point is over here. Right, so this is how the Gartley pattern looks like. Right, so if price comes down towards this level, all right, this region, which is the 0.9189, that's where I'm gonna buy it. Okay, any questions on this? Right, Vincent had a question. Since I recall, right, Vincent had a question earlier. Yes, okay. This pattern is a counter trend, alright? So if you look at it, right, there's no previous SNR. Alright, because this is currently a multi-year low. Alright, there's no previous SNR. Alright. So this trade is considered a counter trend trade. Alright, so depending on whether you are comfortable doing a counter trend trade, you might want to skip this as well. Right. So for me, why I still take it, because there's a confluence of Fibonacci. Right. So just now we pull from this, we have a confluence of 127. Right. And if we pull from here to here, currently there is 1. All right, the 161. All right. So this gives me the extra confidence that if price comes down, it might potentially turn up. All right. And I'm not looking for a huge turn around. I'm just simply looking for my first target and second target. Right, which is somewhere around here for my first TP, and second TP is over here. Right, so this is a counter trend trade. So once again, you need to identify whether this falls into your plan, and then whether you are comfortable taking a counter trend trade. Right. The other factors you want to consider, right, is because of risk to reward also. Right. If I draw this in, you can see my risk is basically this triangle. Alright, my first target gives me a reward of this. Right, so if you compare this risk to reward simply is at least 1:2. So I'm comfortable with taking this counter trend trade because of the risk to reward as well. Alright, so I hope this gives you a clearer understanding why counter trend trades we sometimes do take it as well. Okay, can, right? Yes, so correct. H1 we do have pattern as well, right? H1 is a bet pattern, right? So if you look at this, we have a bearish bet, all right? Entry point is at 949. Go back to the chart, right? 949, which is over here, right? So what we do is, this is right? So if you take from here to here, what you see is that price retrace at least a 382. Alright, and what we had is, if price does at least a minimum 382 to 50%, that's a potential bad pattern. Right, so when I was analyzing this pattern during the weekend, this is what I identified. Alright, so as long as price doesn't break below this level, right, we have this pattern still valid. But if price comes down and break our previous A level, then this pattern is no longer valid, right? So potentially price can still go up like this, right? And then this is still a potential valid bad pattern, right? And if you go through the process, right, which is to look at higher time frame, this has a nice support and resistance level as well. Right, we see some respect of level over here and here. Right, and of course, if you take into account the nearer one, we have something over here as well. Right, so that gives me another extra confidence that it's not just the completion of the potential pattern, but also the previous support and resistance. Right, and if you take into Fibonacci confluence, normally bad pattern we don't have much. Right, so if you look at this, we do not have any confluence. Right, so this pattern, this setup is simply because there's a potential valid pattern as well as support resistance in the past. Right, so this I hope that this give you some clearer idea of how we analyze and certain reasons as to why we want to enter this trade. Okay. Okay. Any other questions regarding this? Okay. Taking trade from C to D. My answer to that is I don't take that. Alright, I don't take trades from C leg to D leg. Alright, but some traders I know they do that. Alright, especially for cipher pattern as well. Right, they take the C leg towards the D leg. So this is something that if you're comfortable doing that, right, and what you need to do is to really also plan it inside your trade plan. Right, so if it's part of your plan, then you can take it. Right, but I haven't really find any edge into really trading the C to D leg. Alright, so this is something that is something for you to also test out in the market and see if it really works for you. Right? Okay. Any other questions on this? Okay, let's scan. Alright, so I'm not sure if this pattern, this setup will complete by today's market because Monday market, just share with you some of my experiences that if you're doing intraday, Monday market are normally pretty quiet. Right, so if you're doing intraday trades, normally even for me myself, I will start on Tuesday onwards. Alright, so if you're doing intraday, the week really starts on Tuesday, right, and it ends pretty early on Friday. Right, so that's the thing. Yes. Okay. Another thing to note, right? Victor pointed this out is that it's NFP week. All right. So majority of the US pair will be pretty quiet, mainly because people are still waiting for the data release. Right. But what you can do is you can then look on other pairs as well. Right. Because the USD dominated pairs will be pretty quiet. All of them will be waiting for the release of NFP, but then you can seek for other opportunities in other pairs as well. Right. Let's just see some if there's any setups. Right. Okay. Since we are this, right, I want to share with you some of the things that to look out for also. Right. So if you look at simply looking at Aussie yen, all right, pound yen, and Canadian yen, all right, what you see is that these yen pairs move pretty similar in terms of their movement and the patterns. All right, so if you identify, let's say, right, so if we quickly identify, we have a potential bad pattern as well, right, over here, right. So what you see is that Aussie yen we have a potential bad pattern, right, and if you look at pound yen, all right, once again, if you follow the ratios, all right, the ratios of harmonic pattern, we have another pattern setting up as well. And then if you look at Canadian yen, all right, if you pull in our Fibonacci tool, you once again have another pattern, all right, but this is not a bad, but it's a godly pattern. Right, so if you follow that 127 extension, your godly pattern completes like this. Right, 127. Right, so what I want to share with you over here is that normally if there's a pattern setup on a yen pair, you can almost find similar setups on different yen pairs as well. Alright, simply go to New Zealand. Okay, this one later I'll share with you. New Zealand don't have. Alright, so if you take this don't have okay. Okay, so simply look at these three pairs, right? The Aussie, pound yen, as well as the Canadian yen. You can see that all these patterns are forming almost similarly. Alright, so there's this factor that you also want to take into account whether you want to expose yourself into all the yen risk, alright, yen pair risk exposure. Right, what I mean is that if you want to take all these three, you need to account that you are basically longing the Japanese yen 3 times. Alright, so this one you really need to take into account as well. So that's why for beginners, normally we don't encourage you to trade the whole basket of yen. Alright, yeah, so this is really something that you want to take into account if you are trading this. Alright, but if you simply look at these 3 pairs, alright, so since we identified it, we want to see if how I'm going to make a decision, right? So I can share with you some of my thought process. All right, so if you look at this Aussie yen, all right, the first thing you want to look at is the trend itself is down. All right, fundamentally Aussie dollar is not strong. All right, so what we are expecting is it's still going to be continuing down, even though it's in a range. All right, so our sentiment towards it is still towards the downside. Right, and what we look at is that at this completion level, we have a previous structural level as well, support and resistance. Right, so this gives us some extra confidence on this setup. Right, and if you compare this to the pound, right, pound yen itself is still I would say okay, it's still a valid downtrend. All right, currently still in a consolidation. Previous was a downtrend, so there's a certain chance that this pair might continue downwards as well. And if you look at support and resistance, we do have something here over here as well. All right, but if you take into the fundamental of pound, all right, fundamental of it, if you compare Aussie and pound, right, fundamental aspect, Aussie is still weaker than pound. Right, so if you ask me which pair I'm favoring more, all right, definitely I would say this pair, all right, the Aussie yen setup has a certain higher chance. All right, so this is based on fundamental aspect coming in as well. And the thing you want to take note also, if you are trading, all right, certain brokers charge you a swap fee, all right, the interest rate swap. So if you are shorting Aussie yen, you are basically paying quite a high price for the swap. So something for you to also take note on. All right, and if you compare with Canadian yen, all right, so if you look at the higher time frame, so you can see that Canadian yen itself, all right, overall is still in the downtrend, all right, but in terms of structure, right, support and resistance is not as strong as the previous two. Right, can you see this? So that's the reason how, or not a reason, but these are some of the factors that you want to consider when you have 3 same setups on the yen pair, and then how you can actually tackle and engage them. Right, so one method is to pick the strongest one that you feel had the highest probability. All right, for example, in this case is the Aussie yen, and then you just trade the Aussie yen. Right, there are some traders who want to be involved in all 3. So what you can do is you can divide your risk into 3 parts, all right, and then entering these 3 trades together. All right, so there are various ways you can play around with it, all right, but the idea is you need to understand that you wouldn't want to go in all these 3 pairs with full exposure. All right, then in that case, when you get stop out, you basically stop out in all of these 3 pairs, and then you get a higher risk exposure than the normal. All right, any questions on this? Hope it gives you some insights into how to manage your exposure as well. Any questions? Alright, so just now Victor mentioned that it's a bullish cipher on NJ. Alright, so let me clear this. Okay, let's quickly check. Yeah, I think that is a valid one. Yep, okay. I'm not sure if this is the same bullish cipher that Victor identified. Alright, this correct. Yep. Alright. So okay, let me share with you that for me it's very simple. Okay, this one maybe more conservative. Okay. Okay, so let me share with you how I identify pattern. Alright, I like to use the fractal indicator as my visual aid. Right, so in all of the setups that I shared with you earlier, right, what you realize is that all my harmonic points X, A, B, C, right, we have a fractal in it. So in this case, there isn't anything over here. So most of the time, I wouldn't pick points like this. Right, but if you are trading just the ratios, alright, meaning you are basing just on Fibonacci, it is a valid one. Alright, So let's assume that, all right, take the assumption that you are trading based on the ratio, all right, and this is a valid cipher pattern. All right, what we're going to go through is also on your structure level, right? So there is some structural level in the past as well, all right. And if you look at our extension, all right, there is some confluence as well, all right. A very small 141 over here, and if you pull over here, you have your 127. Right. So I would say that this setup is not a very it's not a bad setup, right? Indeed it's actually a valid one. Right. So if you were to enter, all right, so let me just key in, because this is not in the signals, but I would say that it is also a valid trade, all right. So if I were to trade it, it's gonna be like this. All right, my entry will be at 7540. Right. SL ticking to that will be at 747. Right, 70 pips stop loss. All right, to find targets. All right, to find targets, once again, what we do is we pull from the top, all right, towards the bottom, where we enter. All right, the first TP will be at the 382 level. Right, in this case, it's 7605. Right, so TP1 will be at 76.50. Right. TP2 will be at 76.5. Oh no, 7605. Right. TP1 is 7605, TP2 is 76.5. Right. So if you are waiting for this setup, this is the entry and stops that I'm gonna put. Alright. So since sharing with you a little bit more, because I already have the 2618 set up, right? So my entry is here. Right. So in this case, if you have two potential setup, right, the question is then which one will you select or which one will you trade. Alright, so this is once again you need to really follow your trade plan. Alright, so there are a few ways you can once again play around with it. Alright, one is that you either enter at the 2618, which is at this level, or you enter at the completion of the cipher. Alright, you can either do this, or what you can do is you can enter half position, right, at the 2618 and enter the other half position at the completed of the cipher. Right, so this is something for you to decide which method you are more comfortable with. Alright, so for me it's pretty strict. Alright, if I enter a 1, alright, I wouldn't want to enter at the other one, mainly because both of these trade, the stop loss is around the same level. Right, but if you are doing it, you can split it into half position, right? Then you can enter 2 trades, right? Depending on whether the cipher will be completed. Right. Okay, so let me just save this as well. Right, and then you can blast it out to the rest. Alright, so once again, since we are on this topic just now, also on yen, right? So what you see over here, NJ and Euro yen, right? Once again, you can see that when you can find one pattern on one of the yen pairs, normally across the different yen pairs, you can also find similar patterns. Alright, then once again, you need to identify, how you're going to expose yourself to the yen pair risk. Okay, any questions? No questions? Okay, if not, what we can do is we can go through one more pair. Okay, yep. Yep. No. Okay, I would say it's exactly lower odds, but for me is why I wouldn't take it is, first place is I wouldn't, high chance that I wouldn't have identified this. Alright, for example, in this case, I wouldn't have identified this setup. Alright. Why is because I train my eye to tune towards fractal points. Alright. One reason is because if I scan through, I'm analyzing too many pairs. So what I want to do is I want to really look through at my chart very fast and be able to identify whether there's potential setups or not. Right. So in this case, I kind of like get used to seeing pairs which has fractals lah. Right. So in this case, there is no fractal that I wouldn't want to take this. You get what I mean? I would naturally have missed this setup anyway. Correct. The reason why is because if you understand fractal basically marks the distinct turning point lah. So because there's no fractal, meaning this point, even though it does reverse, right, but it's not distinct because on H4 it's not a distinct turning point. Yeah. But if you are trading based on ratios and you know incorporating in like support and resistance over like this trade, right, then I would say that perhaps that fractal might not be a very significant factor for you to consider as well, right? But then you need to really put in inside your plan now, right? Whether you want to take this trade or not, because at the end you need to be consistent to really see whether this works out or not. Yeah. Right. Yeah. So if you look at yen pair, yen has as a fractal lah. So this one I will naturally be able to see, but in this case, normally when I scan through my chart, right, I wouldn't be identifying patterns because there's no fractal. Yeah. Right. Any other questions on this? Okay. If not, we can. Okay, you guys understand butterfly pattern? Okay, if not, I can share with you one of the butterfly patterns. Then see if you guys can pick up some points on how to learn how to trade butterfly. Right. So that's on pound Canadian. Oops, wrong time frame. Okay. Alright. So the butterfly pattern is on pound Canadian pair. Right. So once again the process is very similar, alright? So what you see is that over here what is happening is that pound CAD, alright, this currency pair is still in an uptrend, right? And it's currently in a consolidation ranging area, right? But overall it's still in an uptrend. Alright, very simple because the pound, just now I shared with you, fundamentally pound is strong. Canadian fundamentally is still weak. That's why it gives you a very nice trend movement. Right, and over here on the H1 time frame, H4 time frame, right, you wouldn't be able to see anything clearly like this, alright. But if I simply zoom in once, right, what we are looking at is really a potential butterfly pattern, right? Okay, let me go through the process again. So normally the process is really about drawing anchor legs, right? So if I draw in like this, right, you wouldn't be able to see any of the patterns, all right, with these few anchor legs, right? So the clue is, let's say you draw in 4, all right, you wouldn't be able to see anything. The clue is then to break it down into parts, all right? By simply breaking down into parts, you have something like this. Right? So once I've broken down this into parts, right, I'll be able to see that, oh, there's a pretty deep M shape forming, right? If I remove this M shape is very, very clear. Right, maybe 1 hour time frame is clearer. All right. So what you see is that we have a M shape, but this M shape is pretty deep. All right. Then with that, I'll start to measure my Fibonacci. All right, and you see that this retracement comes down at the 786. Yep. Alright, so this retracement comes down at the 786. Alright, so with 786, then we have a potential butterfly. Alright, so we know that between 382 and 50 is a back. Alright, between 618 to 786 is a godly. But once it touches 786, we have a potential butterfly. Alright, so the C point for butterfly is pretty similar to bat and godly. Alright, the unique difference is your A point is at the 786 and your D point is at the 127. Right, so if you draw in, this is how the butterfly will look like. Right, and of course today market rally a little bit. So what we are waiting for is for price to at the end come down towards this level. Right, so if I show you H4, it'll be easier. Right, so what we're gonna do is for butterfly, how we trade it, right? Our entry is over here at the 127. All right, for me, how I trade the butterfly, my stops is just slightly below 141. All right, and then plus buffer. So my stop loss is at the 141. All right, plus buffer. So if I key in, it's at 2.000095. Then minus 25 becomes 7. Right, so my stops is here. Right, and TP is the same from the extreme, which is the A point, towards where we entered. Yep. Right, and then TP1 is at 382, TP2 is at 618. TP1 is at 2.25. Right, TP2 is using 618. Right, so that's how we trade butterfly. And then if you look at the risk to reward ratio for butterfly, right, the risk is simply like this. Right, the reward is really high. So one TP1 itself can give you a risk to reward of at least 1:2 already. Right, so that's the beauty of butterfly patterns. Yeah. Right, so if you look into, okay, let me delete the other lines. Right, so if you look into some of the structure levels on the left as well, we do have some. All right, if you look at here, Richard pointed out. Right, so that's how we analyze, like, and then because this pattern itself is overall with the trend, so there's a certain probability that this might turn out pretty good. Yes, it will be recorded. Yeah, it's recording. And then for Florence, point B itself, no. Normally, butterfly is gonna hit very nicely at 786. Okay, there's a lot of feed running through now. Okay, everything. Right. For butterfly, normally it needs to hit very nicely at 786. So there's not much range. So you wouldn't want the point to hit 886, meaning it hits 786, it must bounce up. Okay, that's depends on your management rules lah, right? For me, it's very simple. If the trade is trigger, right, there's only two outcome. One is gonna hit stop loss, the other is gonna go TP, right? And of course, if it move in my favor in a certain direction, right? So if it bounce, right, there's only two outcome. One is it go down directly and hit my stop. Second thing is if it goes up sufficiently, I'm going to shift my stop loss to break even. So I seldom close, okay, I wouldn't say seldom, I would never close my trade manually. So I'll always let my TP or stop loss decide whether I'm going to exit the trade. Yes, correct. Yeah, I'll just leave it. Yeah, the main idea is because I wouldn't want to for this kind of trade, right, higher time frame being H1 and H4 trades, right, I wouldn't want to be too actively being in front of the computer to manage the trade, because the trade plan is really designed for me to just enter and then let it run itself. Yeah. Right, but of course, if you are more of the conservative kind of trader, then you do expect that it's gonna give a very nice bounce up lah. Yeah, for ideal case. Yep, correct. So if it hits 886, right, it's not a butterfly. Yeah, correct. Risk to reward ratio for butterfly is very good. And it cannot touch 886. If it touch 88.6, it's not a butterfly anymore. So butterfly range of validity is very, very small. It's really between this region only. So it cannot touch your 88.6. Cannot. Okay. I wouldn't say can or cannot, but for me, if the wick touch 886, I wouldn't trade it. Yeah. So the wick means the point must just fall between this. So it cannot touch. Yeah. Alright, I wouldn't say cannot, but for me, I won't trade it, alright, because different traders will trade even though the same pattern very, very differently. So for me is that if the wick touch 88.6, I wouldn't trade it. Can do one butterfly wick. Florence, that depends on the market, because if the market doesn't have butterfly, then we can't really force a butterfly pattern in. You get what I mean? So it really depends whether the market give you a butterfly pattern. Right? Yeah, so so if you look at harmonic pattern, you have a lot of potential pattern, right? So simply scanning through the chart like this, right? What you see over here, it gives you a potential back pattern as well. Right? This is USD franc. Right? So the lessons over here is that you will definitely miss on opportunities, alright, but what you want to see is that you see this is not too bad a setup as well on USD franc, right? A potential bad pattern, bullish as well. So the lesson that I want to share with you over here is that there's a lot of opportunities in the market, alright, but you need to also accept that there will be times that you're gonna miss out on profitable opportunities, alright. The key is not to chase what's happened, alright, but just wait for the next opportunity to come in and then take this trade, right? So for example, this one, I never really see it. Okay, the reason is because when I analyze that trade on Sunday itself, alright, this haven't happened, right? But as the week progressed, what you can see is that price slowly make a valid C point, right? And then because of that, we have a valid back pattern here as well. Alright, so for those who are interested, you can also take a look at this, alright, and see if it fits into your plan, and then you can trade it. Alright, overall trend is still on the upside. Alright, USD fundamental is still strong. And if you look at some of the confluence, you have support and resistance. If you're looking at ratios, alright, not really much. So this is some points, factors that you also want to take into account. Right? Yeah. Alright. Let's see. Yep. You got questions? Alright, so examples of structured trade, right? Just now I shared with you on pound dollar, alright, which is not a very distinct 1, 2, 3, 4 structure, alright. But in this case over here, alright, this is a very distinct 1, 2, 3, 4. Right? So what I mean by 1, 2, 3, 4 is that it's very similar to ABCD, right? But ABCD is trading the reversal. 1, 2, 3, 4. We are waiting for the retracement to take this trade, right? So how we label it is simply this is 1, all right. This is 2. All right, this is 3, and the 4th point is the top. Alright, so for 1, 2, 3, 4, the first criteria that we need is that this point 3, right, has to make at least a retracement of 382. Right, so you can see that it hits that criteria. Right, then the second criteria is that this point 4 has to break and close above the point 2. So you can see that point 4 has established as well. So once you have 1, 2, 3, 4 established, alright, let me delete all the other lines. What we want to do is we want to pull Fibonacci tool from 3 to 4. Right, and what we are looking at, right, or the level that we are interested at is really at 0.2 level. Alright, so in this case, you can see 0.2 coincide with a 50%. Right, if not, if you're more conservative, you can also look at the 618. Right, 618, you have some confluence of structure over here as well. So usually what we're going to do, right, is that when price comes down to this 50, alright, in this case, it hit that 50, what we're going to do is we're going to enter around that region. Alright, So normally this is what I'm going to do. So I'm not going to look at the 618. Right, so normally the entry point is at 50. Alright, this one we miss it because during the weekend we do not have this. That means point 4 hasn't established during the weekend. That's why it wasn't sent out as part of the signal service. Right, but if you're looking at this itself, right, this 1234 has completed at the moment, and if you traded it, it's currently still in a running loss a little bit. Right, so stop loss will be at below the 786. Right, the first target will be at this level. So let me just write in the levels of it. Right, stop loss will be here. TP1 will be there. Alright, so if you look at this trade, your entry will be at the 50% level. Alright, if you've taken this trade, you'll be currently at a drawdown. Alright, and TP1 is here, SL is here. Oh, let me just cancel this. Alright, so what I want to bring you to is the risk to reward ratio as well. So if you look at this, the risk is like this and the reward is over here. Alright, so it's slightly more than 1:1. So this is a potential 1, 2, 3, 4 setup that normally we trade this kind of setup as well. Right? Yeah. Okay. Richard asks if it's 1, 2 equals 3, 4. We wouldn't really take into account whether it's a 1-to-1 movement. Alright. So my 1 to 2 might be different from 3 to 4. Right? Because we are not trading the ABCD pattern. What we are trading is basically the retracement of this setup, right? Together in line with the trend. So what we are looking for is for this trend to continue upwards, right? So what we are expecting is that price will continue higher, right? Because it's in an uptrend. This is how we trade the 1, 2, 3, 4 structure, right? Any questions on this setup, right? So this is also because this week we don't have much example, right? But only one, which is the structure trade. So normally, if the market is in a trending condition, we have a lot of structure trade. But when market is in a range bound, we do have more of the patterns, right? So that's how this strategy fits into the different market environment as well. Okay, any questions? Right, so if you look at Euro CAD, if I'm not wrong. Right, so if you look at Euro CAD, some of your broker might have touched the 786. Right, if it has touched the 786, then you have a potential butterfly pattern as well. Right, which completes very nicely at previous structural resistance. Right, so if you look at previous structural resistance, you have something here, you have something here as well. Alright, so this is Euro CAD, if those who are trading interested in this pair as well. Right, Florence can take note of this pair lah, butterfly. Okay. Okay, this one went through. Alright, so what I normally do is I also analyze the index market. For example, this is the German DAX. Alright, so harmonic patterns and structure trades also applicable to all this market itself. Right, so if you look at the overall trend, currently it's down, and then it has been in a range consolidation. That means this is the recent high, this is the recent low. The high and low hasn't been broken, so it's currently still in a range. Right, but if you look at the 1 hour time frame, right, it's in a strong downtrend movement. So if you apply your 1, 2, 3, 4, right, this is valid as well. Right, so if you put in your Fibonacci tool, you can see that most of the time, right, Fibonacci confluence very nicely with your previous structural resistance. Right, so in this case, if price comes back up towards the 786, that's where we're going to take a trade. Right, so this is our entry at 786, and our stops will be at 100. Right, your previous high. target will be at the previous low. Alright, so if you look at structured trades, right, the risk to reward is really good as well. This is your risk, and your reward will be this, right? So you can see if you trade the 786 retracement of structured trade, your risk to reward is really can be close as 1:3. Right, so something for you to take into account. Right, and if you are looking into smaller ones, you don't have that. Right, so even S&P market, if you are trading that, you can take a look as well. Right, S&P currently, if you look at this chart, we have a potential bad pattern setting up as well. Right, over here. Alright, so you can see that from today's market, sharing with you guys is there's really a lot of opportunities out there. Alright, simply by scanning through the charts, you can see that so many opportunities are potential one. Alright, I wouldn't say it's close because right now where price is and where the completion point is still some distance away. Right, but a lot of things that you can really keep an eye on for this coming week itself. Right, so S&P itself, you have one. But if you look at S&P setup, right, the structure support resistance isn't really strong. Right, so this kind of setup you might want to just keep an eye on, all right, and probably not want to trade it. All right, so this is something that you want to consider also, right, inside your trade plan. What are some of the factors that you want to decide whether you want to take this trade or not to take this trade? Alright, this is USD dollar, alright. Nothing much on this pair. Alright. Yeah, so any questions for today? Okay. Okay. For the rest, any other questions? Okay. I think at the start there's some hiccup on Skype because didn't really know that Skype can only take 9 participants. So I think moving forward, if you are going to do it right, I'll see which platform is more suitable, alright, for such sessions lah. So everyone will be able to have, yeah, yeah. So I'll try and figure out something that is free, alright. Then everyone will be able to use that. Live stream I tried, it will lag, so it's not really efficient as well. Alright, but I'll Twitch TV. Oh yeah, maybe Twitch TV. Okay, so something for me to really go and figure out. Alright, and do give me your feedback. For example, like things that are not clear, etc. Then I can do up recording videos to really share with you more. For example, if you are unfamiliar with any of it, like butterfly patterns or 1 2 3 4, yeah, then I can do a recording and share that video with you guys as well. Alright. Other than that, so just keep an eye on this week, right? Basically, this week, the later part of the week is more heavy in news, alright, especially NFP and pound, right? So these are the two currencies you want to really keep an eye on, right? So other than that, just have a good week and then trade safe. Alright? Okay. Yes. Question. What happened to pound? Is it what? Now or what? Now. There's no news. There's no news. Yeah. Let me check. Oh, pound, not today, not today. But if you look at the news, alright, pound, you need to keep an eye on is Wednesday. Alright, BOE will, as in Carney, will be speaking lah. That's one. Alright, second thing you want to take into account is their current account data release. Alright, and of course the last one is another data release lah, the construction PMI. right? The key thing is you might want to consider fundamental as well. So fundamentally, currently it's only pound and the US market is pretty strong. The rest of the market are kind of weak in terms of their economy. Yeah. So that's something to take note of. Yeah, but for Monday and Tuesday it's pretty quiet in the market. USD pair expect it to be quiet until NFP lah. Yeah. Can right? Okay. Okay then. I'll see you guys another time.